Delay in startup insurance explained. Large construction and infrastructure projects represent some of the most significant financial investments made by businesses today. Project schedules are closely tied to financial performance. When unexpected delays occur. When unexpected events delay completion, the financial consequences can extend far beyond repairing damaged property. Today, we'll discuss delay in startup insurance, DSU, and why it has become an important risk management tool. Disclaimer: this webinar is for educational purposes only. It should not replace professional insurance, legal, engineering, or financial advice. What is delay in startup insurance? DSU Insurance helps address certain financial losses when a covered property loss delays project completion. Rather than covering physical damage, it helps manage the financial impact resulting from project delays, subject to policy terms. Why is DSU Insurance important? Imagine a solar project scheduled to begin in September. A severe windstorm during construction may cause months of delay. Property damage might be covered by builder's risk insurance, but the delay creates additional financial consequences. The broader impact of delays. Delayed projects can impact loan obligations, contractual commitments, cash flow planning, projected earnings. Understanding these financial relationships is key to effective risk management. Delay in startup versus builder's risk. Builder's risk covers physical damage during construction. Delay in startup covers qualifying financial losses from delays caused by covered property damage. The two coverages often work together but serve different purposes. Who considers DSU insurance? Large infrastructure projects frequently evaluate this coverage. Examples include renewable energy developments, power generation facilities, manufacturing plants. Who considers DSU insurance? Continued. Data centers, transportation infrastructure, water treatment facilities, industrial construction, large commercial developments. Every project should be evaluated individually. Events that may delay projects: severe weather, fire, equipment damage, natural disasters, transportation accidents, certain covered property losses. The financial impact of delays. Project completion dates may shift significantly. Financial impact can sometimes exceed the cost of repairing the property itself. Understanding coverage limitations. Not every project delay is covered. Coverage depends on policy terms and exclusions. Cause of delay, waiting periods. Understanding policy details before construction is essential. Reduce delay-related risk through planning. Effective project planning reduces risk, project scheduling, contractor selection, supply chain planning, quality control, contingency planning, contract management. Role of insurance. Insurance should complement operational controls, not replace them. Operational excellence and insurance go hand in hand for risk reduction. Supply chain disruptions and delays. Specialized equipment, transformers, turbines, panels may have extended lead times. Organizations should evaluate procurement strategies alongside insurance. Importance of contract management. Agreements should clearly define insurance responsibilities, indemnification provisions, additional insured requirements, project milestones, risk allocation. Stakeholder communication. Regular communication enables early identification of potential delays. Key stakeholders: owners, developers, lenders, engineers, contractors, insurers, project managers. Periodic insurance reviews are essential. Projects evolve, values, schedules, contractors, and scopes change. Insurance programs should evolve alongside the project. Don't wait for a loss to discover gaps. DSU Insurance, one part of risk management. Delay in startup insurance is just one component. Success comes from strong planning, experienced contractors, detailed scheduling, quality assurance, supply chain oversight, financial planning, comprehensive insurance. Why it matters more than ever. Infrastructure projects grow in size and complexity. As investments increase, understanding physical and financial risks is vital. DSU Insurance helps manage financial consequences of covered construction delays. More educational resources: www.montrageinsurance.com. For more on infrastructure, engineering, commercial insurance, and enterprise risk management, visit. Thank you. If you found this webinar valuable, please like, subscribe, and share with colleagues. We look forward to seeing you in the next executive webinar.